Okay, so I'm going to quickly go over the trades I made yesterday, and what I was looking at, and then I'm going to clear this messy chart out, and we're going to start fresh with some nice market structure. Um, and yeah, so yesterday I was looking for longs in this yellow box here and in this white box. You can see we've got a really great reaction from this white box here with the previous day point of control. Um, at this point, it was where strategies collide, I suppose, because you've got this New York initial balance here. You have a close outside, so your bias is therefore down. But market structure was clearly the stronger of the two, and we got that reaction from the level I was looking for, and you get that nice move out of there. You then go and break the top side of the initial balance before closing. So yesterday was that rare occasion where you close outside the initial balance and then you still take the top side. So usually when we see a close, we would expect continuation in that vein. So definitely an interesting one yesterday. But I didn't trade that because I wasn't at my computer at the time, but I had just made a spectacular trade here, which was just such a simple one, and like anybody can do it. Like I saw initial balance of London, I then saw consolidation. Once that consolidation had broken down and showed me which direction it wanted to go, you see we've got these candle closes below these lows, below that range. We've had an internal break of structure. Once we get the retrace back into supply, this zone here, you can see that with those 15-minute candles. As soon as we got the taps into there, I was filling 1, 2, 3 contracts, and I ran that down and took profits systematically throughout, closing my entire position at around the 618 just before New York happened. So very happy with that. Um, if I wouldn't have traded that, I probably would have traded this long. Would have been tricky with the New York initial balance, admittedly, but you can still see that's quite a fantastic long, and that's pretty much exactly where I was talking about yesterday with the previous day point of control, the MPOC, and the 15-minute block. Okay, so let's clean this out because it's super messy, and I've already got a messy chart, so I'm literally going to. Have I got anything in here? Do you know what? Fuck it. Let's just do it. Yeah. Let's get rid of all of this. All of it. Gone. Nice. Okay. So, what are we looking at? Well, in the last video, I talked about the channel that we're looking at. So, where's that gone? Let's find it. You've got this channel. You can see that we did hit into the lower bounds of that channel. And if we look at it from a Fibonacci channel perspective, you can see this. It's pretty cool. Let's get rid of it. That's a nice way to draw channels, right? So you can see we are tapping into this lower bound of the channel, and we are still in bullish market structure. Why are we in bullish market structure? Well, let's get rid of that. You have a breaker structure here, 4-hour breaker structure there. So the lowest point between those 2 points. So if you draw a box from there to there, pull it all the way down, there's your lowest point. So that is your low. So we are trading between these 2 points. Okay, so everything in between is purely internal. Therefore, we want to be looking for longs, and the best longs come from discount demand. I've covered that plenty. Okay, and I will be discussing that in much more depth, and I will be teaching that to the crew with my own personal modules of advanced market structure. So if you want to learn more about that, join the crew. But simple enough, we're below the 0.5. We've hit into this 4-hour demand here. You can see that. There's a big 4-hour block. Okay, got another one here that you didn't hold yesterday. See that? So it's better to take this one now. 15-minute block, of course. Very nice, and that is now holding beautifully. So the expectation now is that if market structure is to continue, that we will go and break this one. We will go and break this high. That is the anticipation or the expectation of price now. If that doesn't happen and we close below here, well, that is a very, very interesting sign, because if we close below this low, I'm going to just mark this so it's extra, extra obvious. If we close below that low, 4-hour candle, I'd say a 4-hour candle is probably the most important for that. Yeah. If we close a 4-hour, even a 15, to be honest, it's still a sign. But if you got a 15 and then a reversal and it didn't close in the 4-hour, it starts to become a little bit tricky. So if we got a 4-hour close below there, that would be a very, very, very interesting sign that potentially we could be about to see this larger pullback. In which case, this would be a fantastic shorting opportunity, and we could be targeting demand further down. So really, we'd be looking probably to fill those wicks in, maybe touch into this old range here. We'd probably be looking down into that range. And then if that fails, of course, then you've got all of this space down here. You've got all of this space down here. So, you know, we've been talking about this huge, huge uptrend over the last month. We've broken a lot of highs. You can see that. Broken another up here. And we've had a swing failure of that one. Or have we actually closed above that now? Let me see. I know we swing failed. Oh, this magnet tool. Go away. Ah, yeah, we've had a nice close above there, so that's also significant. So the initial approach there, you could see we had a swing failure that high. But now we've had that close, so the anticipation is that we're now gathering more demand, and we're going to go break higher. So what's the next high? Just mark these like this instead. The next high will be here. Be looking into this region here, so we've probably got some supply up there. Where is it? That's probably the first place we're going to be looking for a major reaction. That is a very, very, very strong high. Right there. Let's make that blue. Stick to the color theme. Any weeklies up there? Yeah, you've got a big fat weekly there. Look, that we're tapping into right now. That's interesting. See, we're banging our heads against that. Perfect tap. Red on that. For kind of, but this is just one big weekly supply range. So you cover that with the red box, and you can see that we're literally just tapping into that now. So just get rid of that. You can see that now. So the expectation is higher. We have tapped into that, so you'd imagine we go a bit deeper. We could SFP that high there because we have got another high right there. So definitely the level to watch, 4609. But if we get higher than that, then you've got a nice daily up there. Definitely a region to be looking out for. So if we start breaking up here, if we start going like this, breaking up here, and we do that, then that sign there, this breaker structure, that is a fantastic shorting opportunity, because we could potentially be looking at that larger pullback, okay? Or we've got this potentially happening. So a couple of options today. I expect higher. Plan hasn't changed from yesterday. This is what I was going over yesterday. We'll just quickly look at the scalp data. Let me go get it. Is it? Okay, so London has opened. You can see it's back tested that 15 we were talking about, the previous day points of control. Um, you had that bounce there. Now Asia opened, you had that range, you had the break out of the range, so you've had that breaker structure, the internal breaker structure, now retesting this range. So this becomes very interesting indeed. This becomes a potential shorting opportunity. You can notice in London you get that move up and then the move down and then the continuation. You got the move up and then the move down continuation. London likes to sort of fake the first move, move down, move up, continuation. This one just goes, well, if initial move is kind of down and then continues up. A bit of a choppy one there. London up, down. See, London's never certain when it makes a move. So really, the short here is kind of valid, but it's risky because, like I talked about, the expectation from a market structure perspective, and market structure is king, of course, is higher prices. So I'd be a lot more inclined to I'd be a lot more inclined for price to potentially claim daily open, UTC open. If it can go and claim that and then even monthly open, then I think it's looking a lot better for a scalp long. You want to start seeing, we can see here that was a high there that broke the previous low. So this was a significant internal high. You can see you haven't broken that high and you've pulled back and now you've broken and you're currently internal. So internally bearish. So the internal is bearish on the 15-minute. So what you'd want to see is you'd want to see the internal flip bullish. So if this can get above here, close a candle, then pull back into demand, that's a much nicer long opportunity because we've had the shift in internal structure. That. So really we want to see this kind of thing. Okay, let's see those highs taken out. Achieve much those highs though, did they? We could even, so you've got a couple of options here. You want to see that taken out, you want to see potentially that hold, maybe. Or you could be looking at a situation like this, where you pull back, take out the Monday low, and then maybe you go. So you've got a couple of potential avenues there. But you need to be seeing an IBOS here. Really didn't really, that's not really a nice one though, is it? Yeah, so you need to start seeing the internal shift bullish if you're going to go on that plan before you long, or there could potentially be a liquidity grab here below Monday low. You wouldn't want to see this 15-minute block really lost. You'd want to see that hold, because it looks a lot more ominous because this is all pretty much mitigated demand here. You've got a previous week low that may be more attractive, but like I talked about for that larger plan, you could potentially be looking at something like that. So you need to be a lot more careful. If it's gonna go, it's best to go now, in my opinion. I'm still looking higher. Okay, how long was that? No idea. Thanks for watching. Bye.